Yo, what up, family? So, starting off, man, starting off in 2.0, what we're going to be working on is pretty much training your eyes and basically following the roadmap of the market. So, this is going to be a very simple technique, but I want you guys to apply it for at least, I would say, 20 minutes a day for at least 2 or 3 weeks. And then you'll be able to it'll flow within after 2 or 3 weeks of you applying it for at least 20 minutes a day doing this. You'll get really good at it, right? So what I want you guys to do as we're going through this, you're going to be looking and identifying tops and bottoms in the market as well as patterns, right? So that's what we're going to be looking for as we go through this. So what you're going to need is the paintbrush here, which is going to be under this tool area. And so what I'm going to be doing is flowing through this, and I want you guys to flow through as we get right here. Once we get here, I'll explain how you guys are going to want to, look at it going forward as we continue. So starting off, basically, I want you guys to start flowing and following the market. So this is going to help you guys understand basically how the market moves, right? So we're going, and basically right now we're trending up, right? So we're going, and I want you guys to just identify patterns. So there's a double bottom there. If you can't see anything, just continue to move, that's fine. We have a double bottom here. So every reversal area in the market will identify a reversal pattern. So always just be mindful that anytime you're looking for a reversal in the market will print a reversal pattern, right? Some type of reversal pattern. We have multiple reversal patterns that we can look for in the market. So here you have your wedge pattern, kind of that wedge. It's a little bit ugly there. Let me fix that. Okay. So you have that falling wedge, you have your double bottom, you have your inverted head and shoulders, and of course these are all the same if you flip them over as well. So every reversal in the market will print a reversal pattern. You just need to be able to see it and identify it, right? So, and again, you would have to sometimes fluctuate through different time frames. So what we're doing right now is we're training our eyes to see these patterns very consistently. And so anytime that you're expecting a trade, you want to wait for the reversal pattern to print itself if you cannot already foresee it happening, right? So in this case, we're moving up right now, and this is going to get a little bit more advanced as we push through further. I'm going to show you guys what we're going to be looking at. But we're moving up here, and right now we're just identifying reversal patterns. So we have a double top here. And so you'll have pullbacks, right? So you'll go in the market, you'll pull back and continue. You'll go in the market, you'll have a correction, and then you could continue. Or you just might go pull back and get some type of reversal pattern and then continue. So these are a few of the options that you guys can basically look for as we're flowing through this. So we continue up here, and then we get to a top, and we now have made a double top, right? So double bottom, pull back, double top. Just trying to speed up here. Double bottom. This here is a double top. This one gets a little bit ugly, but I think this is an inverted head and shoulders. Let's go to the 1 hour time frame and see if we can see it. Yeah. So if we look here on the 1 hour time frame, it's a inverted head and shoulders. So you guys see that? Boom. So again, every reversal in the market should show you some type of reversal pattern. Just be patient if you can't already foresee it coming, right? So now we've pretty much reached that area where I was telling you guys we're going to kind of go a little bit more faster. So as you can see pretty much kind of what we're going to be doing going forward. I want you guys to do this continuously over the next 2 to 3 weeks for at least 20 minutes a day. And this is going to train your eyes very well to see these patterns, and not only see them, but get you prepared to start thinking, wait for them. And then at that point, you'll start to be a lot more accurate on your trades, especially cooling down your trigger hand from entering trades a little bit too early, right? So pull back, big double top here. Delete some of this stuff off of here so we can clear this up. So we're gonna go a little faster here, double bottom. This looks like a head and shoulders on a lower time frame. Not every time you're gonna be able to see something clearly, that's fine. This here, we'll just go for a period of consolidation, break, impulse. So now what we're gonna start adding in here is going to be flow of the market, right? So typically you'll have a trending market, right, in a beautiful way, right? Or you'll have just a melting market, right? So you'll have an impulse, correction, impulse, right? So you can also have a consolidated market, right? And of course, this can happen the same way on a bullish market as well. So again, this could trend up. So when we're looking at this, we're about to start flowing in and adding the impulse, correction, impulse, right? So we know we have our lower highs, lower lows, lower highs, lower lows, highs, higher lows, and such, right? So we have that trending market. We're already knowledgeable of a consolidated market. Again, we're not going over the basics like that too much, right? So now we're going to start flowing in impulse, correction, impulse, as well as with our view of the market as we're moving, right? So we're moving here, moving down, getting a little bit choppy. We reach the bottom of the market, right? You can see this market pretty much equaling out from this area here of previous resistance. So you can see why we're probably having that reaction right here, right? And so you can see going forward, if we were to extend this line over, we could see why we're continuously having that reaction, right? So as the market continues up off of this support level, we're not able to see any type of reversal patterns as clear. If we break it down a little bit better, then maybe we can see something more, but I'm not seeing too much that's super clear. I mean, this is maybe an ugly inverted head and shoulders. We have a left shoulder here, maybe a head, and maybe a right shoulder. Very ugly though. I really wouldn't go for that one. So impulse, right? Impulse, correction, impulse, choppy market. Break out of the choppy market, extending market. So this here, when you see something like this, so both of these can potentially give you the same type of scenario, because here you have a impulse on a market and then you have a choppy. So normally you would think in this area, okay, we're at an area of overly extended market and we might need to make a retracement, right? And it looks like we got a false head and shoulders pattern here. So potentially you might would have been looking for a break to the downside for a retracement, maybe into this previous level, and then a continuation up. So that would have been ideally looking for something like that, but we just ended up again getting that break of that top and impulsing up. So one thing I do want you guys to be mindful is, out of all of these patterns, the main pattern that I love to use and watch out for is going to be the double top and double bottom. The head and shoulders pattern is not as accurate as it used to be. So this pattern here is about, I would say, anywhere between 40 and 55% accurate, right? Where on the double bottom, double top, you're going to get almost a 70 to, I would say, 85% accuracy, right? And then I would say the wedges kind of align somewhere between a 60 and 70% range. So me personally, I love to watch out for the double tops and double bottoms. These head and shoulders can get very intricate and they can present a lot of false moves. So just be mindful of when you get a head and shoulders, don't just in your head say, okay, let me go for the head and shoulders. Okay, no, be very cautious on all head and shoulders patterns and make sure that there's something also structurally aligning within that analysis that shows you that that reversal can actually give you, a deeper retracement, right? And that's just going to go based off of structure as well. So again, impulse, and then we get this overly extended market here. So here we get another overextension. The reason I like this one more than this one is because this one is fresh off of an impulse, right? So we just had one impulse. So this one we get impulse, correction, and then another impulse. So at this point, we're now very, extended in the market as far as on a push up. So now this one is more likely to be overdue for a fall than this one, right? Because this one is just now moving away. It hasn't even extended out of the actual structural range, which would be something like this, right? So it's barely getting out of that structural range just here, which was a false break, initially. So you mainly want to look for the overextension part out of the structural range. So if it's still in the structural range, you kind of don't want to count that. So anything outside of it is really when you're starting to say, okay, so anything after this extended period, we might see some type of big fall, and then we ended up getting it after this point. So again, this here, when you see something like this, it's basically, again, reversal pattern, right? So here, same thing here, but it's on the opposite direction, right? So I'll show you guys. One sec, literally, computers acting weird. So what we'll do is drop another chart up. So let's go back to AU and we'll do it on the so we will drop it from here. That one's still frozen. Okay, cool. So we'll continue on this chart with the flow. So basically, again, adding in those structural reversals. So how I was just showing you guys, I'm trying to look for where we were in the market. Here we go. So that overextended part. So remember how I was showing you guys the reversals, you'll have a double bottom, right? Or you'll have a left shoulder head and then a right shoulder, right? Or you'll have that kind of that falling wedge in that reversal. So this is what you're going to typically get here in this case. This is going to be that falling wedge with just a tip of extension on the top of it to really try to clear everyone out before it actually makes the intended move. Let me put a line here so this is neat. Boom. So that's pretty much how that looks. And then you just have, again, that extra push up to kind of clear anybody else out before it actually makes that move. And you guys can see we ended up just pushing to the major large quarter point. So on this reversal here, you're able to see this pattern here. So again, the three most highly patterns that you'll see are going to be these three. And these are the main three that I want y'all to focus on. Again, this course is mainly designed to minimize things that y'all don't need to focus on. So I am very much aware of all of the other patterns that you can expect in the market. I am very much aware of that. The ones that I want you guys focusing on and the ones that provide consistency are going to be these. So this is what I want you guys to focus on going forward, right? So as we continue to flow through the market, impulse, this here would be just a bigger correction. Impulse, we reached the bottom, we double bottom, right? So looking for a reversal soon. Push up, correction, right? So impulse, correction, impulse, drop. This here would be a pullback. So let me show you guys the difference between, and you guys should know this, but let me clarify the difference between a pullback and a correction. So a pullback, you'll have this one kind of move and a continuation. A correction, you're going to see more price action and then the continuation. So it's about how much you see, So this here is a clear correction versus this, there's just one pull. You see what I'm saying? So this is a pullback. The correction is something like this. So when you get more price action, that's when you go on more of a corrective phase. And when it's just one little whoop, then that's when you kind of get, your pullback. So again, pullback, We reach a bottom here, bigger double bottom, right? Go sideways, consolidation, breakout of consolidation, sideways, overly extended sideways market, overall making a huge head and shoulders pattern. Boom, right? So we ended up dropping. Double bottom. This one here looks like a head and shoulders. You'll probably have to go to the lower time frame to see exactly what that is. So I want y'all to continuously do this on different charts for the next 2 weeks. Double top, double bottom, double top, correction. And this is going to be a lower time frame, I would say, correction. If you go to the 1 hour time frame, you'll see it a little bit more clearly. So here we are on the lower time frame. So if you look on this lower time frame, you'll see more price action in this area, right? So you see how we're a little bit more in here. So that's why I chose correction here. Just because I can see the build up on price action. So it's just more so of a visual thing that I've trained my eye to see over time. So again, as you practice over the next 2 weeks, you'll start to train your eye to see the same thing. So that's the purpose of this specific session of this course, is to train your eyes. Double bottom, consolidation, right? So when you have a consolidated market, don't go trying looking for patterns in a consolidated market. You don't look for your top 3 reversal patterns like that in a consolidated market. The only pattern that you're looking for on the top 3 is going to be a potential head and shoulders. That's the only pattern that usually shows itself in a consolidated market clearly, right? So the others, you'll have to really force it to see it, and you don't want to force to see it. So when you have a consolidated market, don't go looking for these patterns. These patterns are more so for your trending phase market, or your end of trend market, or your middle of trend market, or just your moving market, right? But when you have a sideways market of just choppiness, you really don't even want to be trading something like this. So just be mindful of when you're even looking for certain things. So impulse, pullback, impulse, correction, impulse, pullback, impulse, pullback, impulse. Small pullback, double top, drop. That's a little ugly. I'm not really sure what we would call this. Just keep it moving, right? Just flow. See that area that market did give us some type of pullback correction there. Corrective market, pullback, choppiness, ugly. Can't really decide what this is. Keep it moving, right? Don't hang yourself up on what it is, what it's not. Just keep it moving. Impulse, pullback, continuation down. Impulse, pullback, impulse, double top, double bottom. Market's moving sideways market. Flag pattern as well. So understand that a lot of these corrective structures, these are usually flag patterns. It's a little ugly here, but all right. So this is what I want you guys to continuously do over the next few weeks. You got this ugly double top, but it's double top. And so at the break, we would take the measurement, right? And so it would lead us literally, if we take the measurement of this, double top, clone it, it will lead us around this level here. So looking at price action, we would actually just go for this support level here. Boom, and you guys can see after we broke through the double top, boom, reaction right at that level. Break, pull back right at that level, right? Continuation down. I hope y'all are flowing with this. I know some of these lines are kind of ugly. I hope y'all are seeing just the picture of where I'm going with this. Just kind of flowing with double top. Just an ugly area here, sideways, back in and out, back and forth, fake outs, break out of the consolidation just to pop back in to make you think it's going to go back up just to drop back out. A lot of manipulation, a lot of orders being cleared out there. So just always be mindful of when market is going to be doing some clearing of orders, doing sweeps, things like that. Breaking down, continuing down. Sideways market, very ugly. Again, in the sideways markets, you really don't want to be doing too much trading, right? So that's how you kind of minimize a lot of just the unnecessary trades and just the false movements. It's just when you see a sideways market, you really don't want to, be in that market. That's why we swing trade, right? Because even the areas that we swing, these areas are your main reversal areas. So you typically don't get these periods of consolidations. You get the periods of where the market's ready to turn around and actually go. So at that point, it should present a reversal pattern. So a lot of times when we are even trading, we don't really go through this, just because of the fact that, and when I say a lot of times, this is me, in the setups and stuff that I give you guys, and with my strategy, you won't really have to go through this, because this is not even the area more than likely that we were going to even be looking to enter the market, right? So as you can see, the TL down here, which I don't use many TLs, but this is an area that we would have potentially been looking to enter the market. And as you can see, we didn't get any of that extra choppiness and all that ugliness. No, we got a small, quick reversal pattern, more than likely on a 1 hour time frame, a double bottom, and then just that impulsive move up, double top, back and forth there, push up, push down, back into the lows, right? So just, you're reading price right now. What we're doing is just reading price, training your mind to read price. So just push up to sweep this high, right? Just to break back below, to come back into these lows, equal lows, to push back up. Wedge pattern, breakout, pull back into the wedge pattern. Here's an order block. We've sold it again there. Push back up, clear the highs for the bigger drop, right? So knowing for the bigger drop, for the big moves, guys, there's going to be a good sweep. There's going to be a good sweep, and it's going to try to take out majority. Just before going forward in this course, make sure you also know that our mindset going forward is that we do not trade retail no more. We trade more so of an institutional mindset way through manipulation. So we trade with the manipulation. Understand, again, that we already know this, but understand that this market is rigged. It is not designed for us to make money. And the retail perspective is generally how the market business is able to be so profitable. It's because everyone is using the same exact textbook to trade. So they know the blueprint of where you're going to go. So the average trader, they know where they're going to go. So they know exactly where to set the traps. Okay, we know exactly where the retail trader would go as well because we are experienced and we know this through experience and time in market, TIM, time in market. So with that being said, we want to trade exactly like the business of the market, as if we are in it to take the average retail trader's money. So when you're looking for your entries, put your entries where somebody's money is going to get taken before the market will actually go. That is the mindset that y'all need to have going forward, is that you need to be trading where somebody is going to lose a lot of money before the market actually goes into the correct direction. Okay, so it is what it is. Just make sure that you are, again, trading where majority of the people would lose first before the market would actually go where it needs to go. So know, again, I'm gonna say this one more time, know that this business is made to, in order for it to be profitable, the average trader has to constantly lose money. Okay. And so in order for them to constantly lose money, the market industry needs to know what the average person that comes into this industry is going to do, how they're going to approach the market, how they're going to trade, right? And they know that it's going to come with a lot of emotions, a lot of greed, because they know that people are like, I want to get rich quick. It's going to come with a lot of those things. It's also going to come with the retail ways of trading, which is your general ways of trading, which we all learned these ways, right? This is when we all first started trading, but as time went by, they became more advanced and we don't use the same material, or we trade it a lot differently. So again, make sure that you are trading the way of manipulation and expecting for, that extra move to happen before the real move would happen, right? So going forward, we're going to do a little bit more of this and we're going to finish out around this zone here. So again, over the next 2 weeks, please, 20 to 30 minutes a day, go through this flow through different pairs. Different pairs are going to give you different perspectives. Just remember the 3 main patterns that we're going to be looking for. Anything else, you just don't worry about it. If you didn't see the move, guys, you just didn't see the move on a reversal pattern. We don't just trade on one pattern. We use multiple things in confluence. The reversal pattern is 9 times out of 10 going to be the last final confirmation. So it's the last thing that's going to show itself before the move actually happens. So just be mindful of that. You're gonna get everything else in your analysis more than likely before you're gonna see the reversal pattern. So again, moving up, impulse, double top, drop, push up. Really ugly, really choppy. Can't call this one. Just keep it moving. Double bottom. If you can see it, you can see it. Then if you can see it, it's a trade, right? You might see a trade. If you can't see it, you just don't see a trade. Keep it moving. We're not gonna sit here and, go crazy on, well, why didn't we see something here? Why didn't we see something here? Well, that's because there's no trade there. So we just keep it moving. So choppiness, push up, spike, clear highs, impulse back down, literally clear lows, push back up, literally a whole bunch of games, right? Whole bunch of games. Take out here from the top, take out the lows, then just to move on the long impulsive push up. If you're able to see this happening just off of this manipulation, you can potentially find trades that way. It can give you a leadway of a reason to analyze the pair, right? So let's say if you would have come to the market and you literally right here, you came right here and you saw that we just had a break impulse to the high for a sweet false break, and then a false break down to the low, just to respect, support in all these other areas. You probably could have started to foresee what was happening here. But directional here, you can see overall we were headed up, right? So just a lot of false breaks before we actually headed up. So what this actually did was trap a lot of longs, right? New longs, and any of the actual sellers that were here from selling, it actually cleared out their stop losses. So trap longs cleared the stop losses that were here just to decline down. So some people were able to make some money on this sell down, and potentially they thought it was going to go for maybe, further lows, right? And so at that point, we immediately shoot back up. So if they weren't able to grab, majority of their profit, hopefully they were able to grab something. But as we come back down here, what it also does is the people that bought long here, it made sure that it pretty much almost took them out of the trade before it actually really went long. So everybody that was actually truly swinging this for a long time, more than likely maybe have gotten closed out before it actually really went for the swing. So it played with a lot of games before it actually went to where the area it needs to go. So again, trade with the games, knowing that there's going to be games played before the actual true move happens. Push down, and again, we have smaller moves within this push, which we can identify. So we have this impulse, pullback, impulse, double bottom here, impulse, pullback, impulse. This looks like a head and shoulders on a lower time frame. Impulse, double bottom, push up. Period of consolidation, breakout of consolidation, peak towards the highs. So we might have had something structurally here that kind of aligned that area. Okay, so structurally, what I'm having here is actually a higher time frame. This is just what I've been following through on AuddUSD for a pretty much a long time now. So structurally, which we're going to be going over structure in this course as well. Structurally, this is what I'm looking at on AuddUSD, right? So I was expecting this to be the bottom. And what we're looking for is basically for AuddUSD to end up hitting all the way up here. So we could do something like that. And so what it looks like on a lower time frame, you guys may have seen this before, but you'll see something like this. And so here in this range is what we're playing as far as like wave structures counts. You'll be able to count these things, stuff like that. So bigger picture, that's what we're seeing, right? So that's what I want you guys to focus on. And it looks like literally the AuddUSD chart here just froze again. That's crazy. So we're pretty much at the end of it anyway, which was here. So that's what I want you guys to focus on over the next 2 weeks, guys, is to pretty much follow this roadmap, plot the charts, identify the reversal patterns. This is going to get you comfortable with seeing how the market moves, how it should move, what you need to expect, how you want your eyesight to see your entries, your reversals, the patterns, everything. This is exactly how you want to see the market. And as you practice this consistently, it'll help train your eyes to see the market this way. So please, this is mandatory. Over the next 2 weeks after you watch this video, for at least 10, you can go for a minimum of 10 minutes, but the less time you put in, the less results you get, right? So if you really want to, get some decent results, at least 20 minutes to 30 minutes a day for the next 2 to 3 weeks. And after 2 to 3 weeks, you'll have it down packed. Okay. So that's all for this section, guys. Appreciate all of y'all for tuning in, and I will see you guys on the next section. Peace.